America's Forum. Let's welcome back Peter Schiff. Continue our conversation with him. He's the CEO of Pacifica Capital, and we've been talking about energy prices and the economy. Peter, we have a graphic showing the drop in oil prices over the last 3 months. It comes to us courtesy of infomine.com. Before the weekend, the price was approaching $60 a barrel. Do you expect the prices to continue to fall, and why are they falling in the first place?
Yeah, you mentioned before the break, what are the negative consequences of the lower oil prices? It's not that the low oil prices in and of themselves are a bad thing, right? I'm not one of those Keynesian economists who thinks rising prices are good. I understand that falling consumer prices are a benefit for an economy. But what you have to understand is why oil prices are falling. They're falling because the markets are anticipating a big drop in demand as the world economy goes into recession, and that includes the United States. And they're also contemplating a world without quantitative easing where the Fed is raising interest rates. This is negative for oil, but it's also negative for all the other markets, the stock market, the housing market, and it's negative for the U.S. economy. And what's going to be an even bigger negative is when the Federal Reserve comes back with their monetary guns blazing and they launch QE4, then the oil price is going to rise to an even higher level than it fell from. And that's going to be very bad for consumers who have to pay a lot more for oil and everything else.
Peter, let's talk for a moment about the global impact. You mentioned that. Are there any winners or losers to all of this?
In what?
The global impact. Are there any winners or losers to this? Like, are exporters benefiting more than importers?
Well, if you just look at oil prices going down, the countries that have the most to gain from that are mainly in Asia, because these countries produce very little oil and they consume a lot of oil. I mean, America has built up a huge energy industry over the last years predicated on, $80, $100 crude. It doesn't work at $30 or $40 crude, so the whole industry would be dismantled. And that alone would be much more disruptive than, let's say, the bursting of the dot-com bubble. You'd have a lot of losses in the financial market. You'd have a lot of layoffs in the real economy that would result if it turns out that all of that investment was malinvestment because it was one big bubble. But I think long run, when everything settles down, I think the real crisis is a dollar crisis. Right now, people are worried about the ruble. That's just, the warm-up. The main event is going to be the dollar crisis. And when our currency starts to collapse, it's going to be much more problematic. They just raised interest rates to 17% in Russia. Imagine what would happen in the U.S. economy if the Federal Reserve had to raise interest rates to 17%. I mean, we can't even raise them to 7%.
And so in a minute and a half remaining, you've been talking about the Fed. You say you're confident they're going to move ahead with a QE4, just print more money. Is your simple advice, don't?
Well, they shouldn't have done QE1, 2, and 3.
Sure.
So why should they stop now? The reason they did QE3 was because QE2 didn't work. They did QE2 because QE1 didn't work. And so they're going to have to do QE4 for the same reason. Because QE3, not only didn't it work, it made the problems they were trying to solve worse.
So, Peter, ultimately, in the 30 seconds we have remaining, what should we be doing? Is there anything we can do to avoid this recession?
Well, just prepare for it. Gold prices are still cheap. They're just around $1,200 an ounce. The dollar is overvalued against most of the world's solid currencies, although not that they're as solid as gold, but they're certainly less flawed than the dollar. So I think people need to invest abroad, look at the international stocks in the right markets, in the right currencies, take advantage. There's a lot of opportunities now in the energy sector, even though I have no idea how much lower oil prices might fall in the short run. A year from now, I think they're going to be a lot higher than they are now. And so there's a lot of opportunities to be made in this sector for people who have the stomach for the short-term volatility.
Fair enough. We'll have to leave it there. Peter Schiff, the CEO for Pacifica Euro Capital, we thank you very much for your time, and we'll have you back in a few months to take a look at what's happening with those energy prices. America's Forum, there's lots more to come, including a discussion of an organization that turns 60 this year. Stay with us for that organization and its special story next.